going on, everybody? I'm back with another video for my OMI homies. Now, it's been a couple of weeks since I last uploaded a video. I was busy at work, and then I've been sick for the last 4 or 5 days, so I haven't been able to put out any content. And in that time, a lot has changed. Things have changed in the markets. More importantly, things have changed in the world. As we all know, last night, Russia invaded Ukraine. It's something that's been on the verge of happening. It's also something that I believe most people didn't actually expect to happen, but it did happen, and now the markets are reacting. So we're going to talk about that in this video. We're going to talk about the geopolitical and macroeconomic events that are going to be impacting the markets, impacting the price of the OMI token for the foreseeable future, and what my strategy is for the next weeks and months. So there's a lot to talk about. If you like this sort of content, make sure you hit the like button, subscribe to the channel. Now let's get into it. Let's start by taking a look at the OMI charts. So the OMI token had been holding up relatively strong compared to the rest of the crypto market in recent weeks. Just a few weeks ago, we were at 0.007. Of course, this is because of the IMX migration and the fact that we're due to have multiple exchange listings soon, and so sentiment for the OMI token was strong. A lot of people were expecting big things to happen, and so the token price was actually holding up quite strong compared to the rest of the crypto market, but that didn't last long. On February 19th, we dipped below 0.005, and when I woke up this morning, we were at 0.0031, which is the lowest price for the token since August 29th. Now, the price has recovered a bit since this morning. At the time of this recording, we're at 0.0038, but with all the uncertainty in the world, in the crypto markets, and in the overall markets, it is very possible that we could dip again and dip even further to prices that we probably thought we would never see again. So later in the video, I'm going to talk about how I'm positioning myself during this cycle of the market. But first, I want to get into some of the news stories that will be affecting the market, and also talk about how wars have traditionally affected markets. So we don't know how long the situation with Russia will last. We don't exactly know what America's involvement will be, but we do know that things could get more complicated in the world. Because as Russia is invading Ukraine, China is testing Taiwan. Last night, 2 Chinese military aircraft entered Taiwan's air defense identification zone. So with the current war in Russia and the threat of war with China, I wanted to take a look at how the markets have traditionally reacted to situations like this. And research has shown that historically, stocks have largely shrugged off past geopolitical conflicts. From the start of World War II in 1939 until it ended in late 1945, the Dow was up a total of 50%, more than 7% per year. So during 2 of the worst wars in modern history, the U.S. stock market was up a combined 115%. So according to this article, this is when markets can suffer. History tells us that periods of uncertainty like we're seeing now are usually when stocks suffer the most. In 2015, researchers at Swiss Finance Institute looked at U.S. military conflicts after World War II, and they found that in cases when there is a pre-war phase, an increase in the war likelihood tends to decrease stock prices, which means that when people anticipate a war is coming, prices go down. But the ultimate outbreak of a war increases prices. Now, a possible consequence and result of Russia invading Ukraine is that the Fed may take a less hawkish stance on raising interest rates in March. A JP Morgan Chase strategist wrote that the Russia-Ukraine crisis could force a reassessment of the Fed in regards to raising interest rates, while policymakers may also consider additional fiscal stimulus, which means more money printing. So there are so many variables and moving parts involved that it's really impossible to tell how things are going to play out over the next few weeks. So it's important to be prepared for every possible outcome. And to complicate matters even more, any day now, Biden is set to release an executive order on crypto. The executive order is reportedly aimed at directing state agencies to formulate a government-wide strategy to regulate crypto assets and examine financial stability issues that may arise from digital assets. So this executive order is likely to be the president putting different agencies in charge of researching different parts of cryptocurrencies in order to recommend regulations down the line. So this is really a perfect storm of FUD for the crypto markets, with the threat of regulation, with a war in Russia, with record inflation and the Fed about to raise interest rates. We're being hit from every angle. So how do we handle this, and what is the strategy? My strategy remains the same as it's always been, and that is to dollar cost average in. That's because I find it really difficult to time the market. This morning when I woke up, OMI was at 0.0031, and I put in a buy order. Now, is it possible that OMI drops below 0.003 in the next couple weeks? It's possible. Do we know that that's going to happen? We don't know, and that's why my strategy is to always just dollar cost average in and not try to time the market, not try to overthink things. Just incrementally dollar cost average in over time. And if my thesis plays out over the long term, because I'm not looking at 2022, I'm looking at 2025 for the majority of my investments, then whatever price I'm paying will be fine over time. Now, that being said, this cycle of the market is a good opportunity for people to make money over the long term. But now, what about those OMI catalysts? What about the new exchanges that we were promised after the IMX migration? There were 3 to 4 new exchanges that were anticipated to happen after the IMX migration. Many people expected to get at least one new exchange before the end of February. Thus far, we've heard nothing. I do think that it's possible that the current market sentiment could impact the timing of the listing of OMI on new exchanges. And I believe that because I think if you're a major exchange, you don't want to list a new token when sentiment is at an all-time low. All right, you want to list new tokens when sentiment is higher. There are more people, more retail investors coming into the market. Just makes sense to unveil new products when sentiment is high. And so I do think that it's possible that we could see more delays of exchanges. But again, that's just me speculating. Who knows how it will play out? I think it's safe to assume that under the current market conditions, any new exchange or catalyst wouldn't have too big of an impact on the price of OMI until we get through all of these worldwide issues. In the meantime, we continue to burn record amounts of OMI from the reserve wallet. We continue to onboard new people into Vivi. Nothing fundamentally has changed. In time, this will pass. All you need to survive a bear market is cash and conviction. And if you don't have cash, all you need is conviction. That's it for this video. Hope you all enjoy the rest of your week. As always, stay happy, stay healthy, and stay safe. I will see you in the next video.